What's going on, ladies and gentlemen? Welcome back to the channel. I hope you guys are all well with this crazy volatility we've been having out of the markets lately. So in today's video, what we're going to do is we're going to touch base on a couple of wave counts for the SPY, the Qs, the SMH. We're also going to take a look at the IWM, the Dow, and potentially TLT. So before we dive into the analysis, guys, you already know what to do. Subscribe to the channel, give this video a thumbs up, and don't forget to hit that bell icon so you'll be notified when I upload the videos. As an alternative, I have my Discord group, which you can join with the link down in the description box below. So let's take a look at our SPY chart on the daily time frame. I'm not going to turn on the labels just yet. So we're going to take a look at our indicators, right? Our moving averages here, which we have the 200-day, the 100, and the 50. As you guys can clearly see, it was back here on somewhere, oh, let me hide this, somewhere in July, between June and July of 2020, where we retested it, right, the 200-day period moving averages, and we had the convergence and the crossovers between the averages, the moving averages. And now what we're looking at here is a rejection, okay, of the 100 and the 50, and now we're closing right below the 200-day period moving average. Now this is by far an alarming situation, to say the least, and I'll tell you why. Because at the moment, I have had counts suggesting that we will see further price action to the upside. It is still valid, but if I have to now step back and weigh the odds, I'm going to weigh more towards the correction is ongoing, whether that's a primary degree wave 2 correction or a wave 4 correction. All right, so we're going to determine which one we are in at the moment. So the way I'm looking at this, guys, now is that this whole structure from here, right, to here is one big cycle. Okay, so from 2020 to 2022 is one big cycle, and now we're correcting this entire move. Okay, so the way we're looking at this, guys, is that even though this is a short-term bearish count, but in the long run, it is a very bullish one. So we're looking at this as the wave 1, wave 2, wave 3, 4, and 5 to give us the wave 1. All right, now in that case, then perhaps what we're looking at is a potential wave 2 pullback, right? And we have the makings of the A wave, retrace back in B, and then we get C. So this has to unfold in either 3 or 5 waves, which is looking like it's going to do a 3 wave. So it might be a 3, 3, and 5, right? So it has 1, 2, and 3 for the A wave. Then we retrace in 3 waves back into the B, and then we get a 5, 1, 2, 3, 4, and 5 sell-off into the wave C of 2. Right now, this is going to take us anywhere between a 23% to a 38.2% retracement of this entire move. I'm just doing this of this entire cycle here. So let's turn on our labels and let's take a look at those counts. Let's take a look here, count 3. So the way it is that, as I just mentioned to you guys, right, we have 1, 2, 3, 4, and 5, and now we're looking at the A, B, and C potentially further down. Okay, now why I'm saying this is because we have had some problems trying to break above these two zones, right? We have had problems between the 458 as we double topped here, and now we're rejecting it, closing below the 200-day period moving average. We also have the Nasdaq not been able to cross over it and rejecting it as resistance. So if this is the case, right, then what we got to do is we got to take a look at certain levels, right? And let's take a look at what those levels might be. So levels to the downside to keep our eyes open for, to confirm this count, right, is that we want to see price action stay below 458.18, right? Because the way we have this drawn, right, is that this is a clear 3-wave structure, right? 1, 2, and 3. And then what we got to do here is that we have our wave 1, our wave 2, the makings of 3, 4, and 5. So there's two things we have to keep on watch for this count. And that's that we maintain the third. So the third wave has to go down towards at least 100% extension of wave 1 compared to wave 2. All right. So where does that go? So a 100% extension, which we've already surpassed. So the next level to watch is the 1618. So downside support, should we continue on down with the SPY, should be 436.18. So 436.18 is our level to watch for a completion of the wave 3. We then bounce back into wave 4, and we must maintain this low on the wave 4. So once we complete this here, which may come into next week, if this is a count, all right, then we'll touch base as to where this is going to be, because maybe the wave 3 could still be ongoing. Who knows? So we have to wait and watch for that. So again, keep your eyes open for this zone, guys. All right, we want to wait to see if we stay below 458.18 and we can retest 436.18. Okay, wow, that's a coincidence, 18 and 18, huh? So once we see that break or that support, we bounce back in 3 waves for the wave 4, and then we go. All right, guys, so that's that one. Let me clean this up. Let me go to here. And let's shut this off. And now let's go back to our truncated fifth, which is our preferred count at the moment. All right, our preferred count at the moment is suggesting that instead of this being, right, the completed cycle, right, like I mentioned to you guys in the previous count, right, this was being wave 1 and we're making to wave 2. This is suggesting that we are in the third. We finished the third wave back on November the 22nd. We have our WXY completed for the wave 4 in the primary degree, and now we're still struggling to make our wave. Not struggling, rather, we're making our wave 2 pullback. All right, so levels to watch here. Let me quickly review this for you guys to see what the game plan is for next week. All right, so let me zoom in here real quick. So game plan for next week is this, right? So reviewing this count, this structure here, we have 1, 2, 3, 4, and 5. 5 truncated, did not go beyond third, and now we're looking for the A wave or B wave. So we started with this trend line, right? We got to keep our eyes open for this trend line, which originated back here on January the 24th. It was confirmed on the 28th, and now we broke below it on the 11th. All right, so what I'm anticipating, guys, is that we see a sell-off, right? And then we're going to come and see a potential bounce to retest this this trend line, okay, to retest this trend line here that was one support, and now it'll be resistance. So in 3 waves, we retest, and then we sell off in 5 down to the wave C. Now this zone is yet to be determined until we figure out where and when we get the wave B. All right, guys, so there's still hope just as long as we remain north of invalidation, which is the origin of this wave 1, which is down here on January the 24th low. So this count here, so I'm going to label this wave count invalidation. Invalidation, there you go. So 420.77 is our must hold area, guys, for this to play out, right? Because if that's the case, then it's easy, right? We have 1 ABC into 2, wherever this lands. Let's open up the 618, all right, just in case we get a deeper correction. 38.2 is a little bit out of the question at the moment. So we actually, look, guys, we held the 50% retracement as support, as you can clearly see. So 438 is clearly our levels to watch for next week, and then we're gonna bounce. So 438 levels to watch for support. 450, 448, and trendline resistance will be our levels on the upside to keep on watch. We then get a breakdown, and then we take off. All right, guys, so I hope that's clear. Let me know down in the comment section if you have any questions regarding this count. All right, so let me confirm this here, and that's pretty much it. And last but not least, this one is already invalidated, right? This count is invalidated because 1, 2, 3, 4, we had an ABC or triangle, and the triangle broke below these 2 key zones. All right, we broke below the wave A and we closed below the wave 1, so this is no longer on the table as an option. All right, guys, so likely we want to see wave A, wave B, and then wave C to hold support at the 618. All right, and then we go. Otherwise, it is likely, ladies and gentlemen, that we are going to start seeing further price action to the downside. Okay, so let's take over to the Qs. Let's look at the price action over here, and let's digest this. So let's take a look at the bullish count, right? So the bullish count is suggesting the same thing out of the Qs, out of the SPY. So here we truncated on the C wave. Sorry, we truncated on the 5th of the C of the 4, right, on January the 28th or the 24th, the 28th, right? We then will go on the point 1 ABC to the wave 2. Now these are levels to have our eyes open for. All right, we know that the wave 2 cannot retrace beyond the territory of its origin, right, because that'll be a 100%. So that's invalidated. So we are at the 78.6. So we have 337.95 as our first level of warning, and then we have our final warning at 334.17 before we can start discounting this count here, this wave structure. All right, if we start breaking below these 2 zones, all right, then this count is no longer valid, but we can still have a leading diagonal scenario. All right, and that leading diagonal scenario, ladies and gentlemen, is still the same implications. We must hold this area here, but this is more likely the case if all the indices on the other charts play out how we were expecting it. So we have our wave 1, a wave 2, 3, ABC pull back into the wave 4, 3 waves in an expanding variety triangle, which is valid, and then we get our 5 to the upside. Now, the fit to the upside, should this level hold, will be 378. All right, but we must maintain price action above 338.0208. All right, guys. So that's that. Let me know if this format is better. So we're gonna take a look at, let's see here. Let's take a look at other charts. Let's quickly dive into let's look at the SMH chart. So the SMH, all right, I only have one available scenario here. If you want to see the alternate counts for the SMH, I encourage you guys to join TrendingWaves. The link to the Discord group is pinned down in the comment section. You guys have access to any chart of your choice. Just request it. We'll get it right over to you with wave counts suggesting validation levels and alternate scenarios, so that you guys can make educated decisions and on your plays. All right, and you have some guidance as to whether or not you wanna get in the investment. So out of the January 28th low, we have our wave 1, ABC to the wave 2, 1618 support. All right, now what we're looking at this, guys, is that if this holds above north of 249.57, all right, because if we break below it, we break below it, then obviously we can't retrace beyond the territory of wave 1. So ABC clearly 3 waves down. Okay, so once we see this happen, if we hold support, then the likelihood, actually, let me take a look here real quick. This is a 618, is it? Yeah, perfect. Look at that. So a 618 confluence with the extension of wave A versus wave C, right? This is the extension. Let's take a look again. So this is A, this is B, and this is C. Let's demote this to a minute degree, change this. All right. So if we take the extension tool from the high of wave 1 to the low of wave A, and we go up here, 1618 is our target. All right, so we have confluence of 2 zones, right? The 618 being the wave 1 and 2 retracement, and the 1618 extension of wave A versus wave B. So it is likely that we may see some sort of push coming into following days. All right, don't quote me, I'm not too sure. We may see, well, not that I'm not too sure, but sorry about that, I didn't mean to say that. But what I'm trying to say is that we may see price action head on higher if we start breaking the highs of wave 1, 284, 284.18. All right, then this can start being a validated, a valid count. Otherwise, if we break lower, below 249.57, then obviously we are still in a corrective move. All right, so looking at TLT, let's take a look at TLT, because this chart is pretty interesting at the moment. So TLT is reaching a point, and with this whole situation with the bonds and yields, and it's getting really out of hand, and there's a big play brewing underneath this chart that we have to pay attention to, because if we take a look at the US 10, right, we see that our alternate count on the US 10 is suggesting that this whole thing was a complex correction, right? And that even though we broke above the 2% mark, right, which was pre-COVID, we see some sort of divergence, right, with the RSI. We see price action, RSI making a lower high, or price action making a higher high at the 2%, 1272 external retracement of wave A and B. So I'm thinking that perhaps we see price action start falling lower, then we see TLT start heading on higher. Because the chart of TLT will suggest that this is the end of this wave B of C. So we have 5 waves down, right? 1, 2, 3, 4, and 5. Okay, and then we start heading on higher. So the higher time frame, although this is short term, I don't know where this will land. We just gotta wait and see. This is a 1, A, B, C to A, B, and C to the 2, 3, 4, and 5 lower, and then that's when obviously you guys know what's gonna happen. So let's take a look at futures. Let's take a look at the Dow. So as we discussed in yesterday's video, the Dow seems to be also, I mean, I'm confident in this chart, right? You see here, this is exactly what we want to see out of the SPY, right? If we look at the SPY again, real quick, let's take a look here. Is it this candle, the truncated? Yep. So that's what we want to see exactly. So we have the trend line here and the Dow. We have the trend line here that acted as we broke below it, we back tested it, and we then broke below it. That's exactly what we want to see out of the SPY. We broke below it, we want to retest it, and then we go back down. Okay, so back to the Dow. This one is it's giving me a bit of a positive outlook, because unlike all the other charts we just looked at, the Dow is the only one that has broken above its February 2nd high. Okay, so this is clearly 1, 2, 3, 4, and 5 to the wave 1, A, B, C to the wave 2. All right, so if we take our fib retracement levels, you see that at least we were shy of the 38.2, or I'm sorry, shy of the 50% retracement, but just below the 38.2. All right, and if we're gonna take this further, let's take a look at our retracement zone. So from the A to the B, we may be just shy of the 100%. Okay. And where's the C landing? So the C is just at the 50% retracement, sorry, the B. So all of this is pretty much valid, A, B, and C, all right, for a wave 2, and then we start getting going, right? So maybe value plays are the thing to keep on watch for next week and for the coming days. But you already know what to do, guys. So anyway, you have your marching orders, I guess, right? The Russell, we just reviewed that chart. The ES, we looked at it. So let's take a look at see if there's anything else we want to touch base on. Indices. I think that's pretty much it, ladies and gentlemen. All right. I'm gonna do, actually, let's see if we could do Bitcoin. All right, let's take a look at Bitcoin. And let's take a quick dive in the daily time frame. So what I'm looking at here on Bitcoin, ladies and gentlemen, is that we have been out of our third April the 9th high, okay, which was here at 65K. We're looking at a triangle. All right, so we have A, we got B, we have C, and now we're in the makings of the wave D. Whether this D is going to be anywhere here, well, let's take a look at our retracements to see where that's going to land or potentially land. So we don't have, we may have the A wave already completed, we may be getting the B wave, and we may be heading for the C wave. So let's wait until see what this weekend holds for Bitcoin. But overall, what I'm trying to say is that this is looking more like a triangle rather than a flat correction. Okay, so yeah, I don't have the flat correction chart here, but what I'm saying is that, so we have the triangle formation, we may get the B wave, the D wave completed, as long as we remain north of all of these higher highs and south of the wave B, then this is the play. All right, then we get a lower high here in the wave E, and then we go, and that's pretty much it. But this whole wave count will be invalid once we break below wave A. All right, guys, so keep your eyes open for that, and that's pretty much it. So, you know, crypto's getting wrecked, equities are getting all wrecked, AMD, brutal, and then the indices are all getting wrecked. All right, guys, so thank you so much for your time. Hopefully this is of use to you. Give me a thumbs up in this video. Hopefully you watched to Bitcoin, and I'll see you guys on Monday. Take care.